Hi guys, it's Chris here. I just want to continue a little bit and share with you a little bit more about the Ichimoku Kinko Hyo indicator I touched on last week, and just how to use it for, in the best possible context, so you're going to get the best possible success with it. So, what I don't want you to do is just to use it on its own. I want you to use it so that we're trading it in the general direction of the trend or the momentum of the marketplace to give you the best possible results. So, if you're looking at a daily or a 4-hourly charts, the general direction from those charts first before going down to the hourly and trading it on the hourly. So I'll try and show you what I'm talking about. So we've got a chart here of the pound Canadian dollar, and for the last few months it's just been ranging up and down. So we've had a couple of lows here, a couple of highs here, which is indicating that we're in a range. So you can see it's going slightly upwards, but it's pretty much still a range. It's pretty much sideways movements. And then you can see with the stochastic down here, you've got a low and then the high and then the low and then the high and then the low. So you got your two highs and your two lows, so you're in a range. So it's a sideways movement, but a range tends to ping pong between these 2 points. So once you've got the markets coming down into this, level with these 2 points, then you're kind of expecting that the market is now going to go and bounce right up to where these 2 points were. So what we can do is we can trade it obviously from here up until, where's my, 1 second. It's just very faint, so I couldn't see that square. Let's change the color quickly. So you can trade it from here to there. But we can do that on the daily, but we can also see if we can get some trades on the smaller time frames. So if I click down to the hourly and I find that section of chart here, let's do that. Find it. Bear with me, guys. There we go. So there's that section there. So, you'll notice that there's maybe not any great big retracements back to a 50 or a 61.8 to be able to, take that with the way that we teach you to trade on the force. But if we use the Ichimoku indicator, let's just delete this kind of stuff first. So we got rid of that. So this is the section on the day that we're looking to trade up of that range. Okay. And if we now apply the Ichimoku Kinko Hyo, okay, so now it gives us all these other lines that we briefly discussed last week. So just to give you a little bit of a recap. So first of all, you've got these red and blue lines. So for a bullish signal, you want the red line to be above the blue line, and for a bearish signal, you want the red line to be below the blue line. So that's the first thing that you would look at. And then you also want your market price to be above the cloud. So you want the market price to be above the cloud, and at the same time, so this here we call the cloud. Okay, so you've got the clouds there. So if you're looking for a bullish signal, then your candlesticks must be above these clouds. Yeah. If you're looking for a bearish signal, then your candlestick should be below the clouds. Okay, so we're looking for a bullish signal because we want to trade it up. So the other thing that we will look for is or we'll look at this green line here. So first of all, yes, we've got a cross here of the red and the blue line. So the red one has passed up. It's our candlestick is right on the edge there. I wouldn't have really liked to have taken that, but we can see here we've now got a candlestick which is just broken above this cloud, and the Ichimoku is also giving, oh sorry, the red and the blue lines, I'm not sure the Japanese names, but they're also giving us a bullish signal. And then the next thing that we would check is we would check on the green line. So the green line is a lagging line. So it lags 26 candlesticks below, behind. So the green line in real time appears 26 candlesticks behind the current price. So we need to also check, is that green line above the current market price? So in this case, it is. So we could basically enter a trade based on that giving us a bullish signal from the red and the blue lines, or it just breaking above the cloud or the cloud line there, and also the green line being above the price 26 candles ago. You could have entered the trade there. So when would you get out of the trade? Well, the rules for getting out of the trade is really trade it up, and then as you go, move your stop loss up. But then you get out of the trade if you see a bearish candle, or if you see a candle break and close below this blue line. So that is your signal for getting out. So have we taken that trade, we would have taken trading from there right up until there. So it's a good 200 pips that you would have got. If you want to put a stop loss in, then you can put it below the blue line, possibly slightly more if you want, or maybe below this wick here. That would be a good point. And as I say, as the market goes up, then just trail your stops. So drag it up every so often, up to the blue line, not too close. Okay, so if for example, this is the candlestick, don't bring it up to here because you might get a wick that passes right through. So just lag your stop loss a little bit, but then if you do see a clear bearish break, then obviously then you want to exit the trade manually. Then obviously price has gone up, so we're still expecting more upward movement. So again, you can have a look here. You've got a bullish candle. Also, to make note of anything that you already know. So for me, I would say, okay, that has just closed above all of this resistance level. It's above the cloud, so that's a tick. You've got the green line, which is now 26 candles lagging, so you wouldn't have seen all this green line at that point, but this green line is clearly above the price there. And then just to be sure, maybe you want to wait for an extra candlestick or two to confirm that you've got that crossover as well. And then you could have entered that trade. Where have you gone now? Lost myself. Yeah, and then as I say, trail up on the blue line, and then if on a bearish close, then exit the trade, and that's good for 86 pips there. Then yeah, if you're expecting the market on the higher time frame to go up, don't look for the bearish signals. Okay, so stick with, if you're trading upwards on the daily or the 4-hour, stick with that. So just as another recap, so first of all, you've got to ask yourself, is the price above the clouds for a buy? Did the blue and the red lines cross over? And is green line that's now 26 candles ago, is that over the price? So you're looking at when the red and the blue things cross, or alternatively, when they have already crossed and then the price breaks up above the cloud. So you've then got all the conditions which have been met. And the nice thing about that is that it sometimes gets you into trades that you wouldn't be able to take on the ABC strategy. So if I go back, I'll just get rid of that. delete. Oh, yeah, I've lost where I am now. It's there. So we're talking about this leg up here. And go back to the hourly, go to that point. My computer's playing up today. Sorry, guys. My screen there. Sorry, guys. For some reason, the platform is playing up at the moment. But yeah, what I'm really trying to say is that it gets you into trades. You know, sometimes you're looking for trades to trade it up on a smaller time frame, but there's no real clear A, B, C's up that you can take. So it's worthwhile just you know, taking a look at your Ichimoku to see if there's any signals on the Ichimoku that you can see on that wave up. Then just have a look at another example. Let's have a look at this wave up here. If you let me. This video is not being nice to me today. Sorry, guys. Okay, so we're looking for basically here. You know, we're in a range. It's going ping-ponging from the highs to the lows. We've got the stochastic come to the over sold section. So we're looking now at that section of chart. We then go down to the 1 hour. Try to find that section. Hopefully it will let me. That is that section in pink. Get rid of the other indicators. Let's put Ichimoku Kinko Hyo on. Okay, so now we obviously from this point upwards is the point that we're looking at. So the first thing we're going to look at is where these things are crossing. So they've crossed here. You've got the red, which is come above. But if you have a look at where the price is, it's below the cloud. Okay, so this is the cloud there. We're looking to buy, but we're not going to buy because the price is below the cloud. Also, okay, that is above. Okay, so we've got two things, but we want to get the price so that it's above the cloud. So we're not going to place a trade there. We need a little bit more confirmation. The red and the blue have now crossed back bearish, and everything's just mixed up with each other there. So it's not a good time. Next, the red crosses above, but we're still in that cloud. So it's not, again, it's not a good time to actually place a trade within that cloud. Okay, so then all of a sudden we see this candlestick here, and that's given us a close above these little levels here. And you know, if we're looking at the Ichimoku Kinko Hyo, then we've got a close which is now above the cloud, and we've got these have crossed over. This is all a bullish signal. And then you've got your, this would have been 26 candlesticks ago. So at that point there is above where the price is. So then you could have entered the trade at that point. Okay, so that's where you would enter. Question is, where would you trade to? And as I explained before, yeah, a good point of call is just to wait until you get a bearish close below this blue line. We're still on an upward, so it's all still relevant. So you see another cross here. You've got to ask yourself, number one, is the price above the cloud? Answer is yes. Number two, is the red above the blue? Answer is yes. Number three, is the green line above the price? Well, not really, eh? So I would not place a trade at that point. I would prefer to wait. Yeah, I prefer to wait, and then you see as well the pullbacks on here. So when it widens apart, it means that there's quite a lot of volatility there. And then if you see any kind of candlesticks as well, you can consider entering on if you see like a hammer or something like that, you can consider entering there with a stop loss below, and then trading it up, as I say, to the next point on the next candlestick. You see closes below this blue line. So yeah, that's really it for today, guys. If you've got any questions, then let me know. Pop onto the chat room, give me a call, or come into the office, and then yeah, we're here to help. Thanks.